I'm here with Sam, Darrin, Jack, and Cole, part of Group 11. And today our team will walk through a data-driven analysis of Ford's position in the electric vehicle market. Over the last few years, Ford has heavily invested in EV development, yet their recent sales trends suggest a surprising decline. Our goal is to understand whether this drop is temporary or a deeper strategic issue, and ultimately what Ford should do moving forward. Here's what we'll cover today. We'll start by outlining Ford's business problem and why it matters right now. Then we'll explain our data approach and the crisp DM methodology we followed. From there, we'll look at the EV market and Ford's competitive environment before diving into Ford's own performance through exploratory analysis. After that, we'll walk through our forecasting models, discuss ethical considerations and limitations, and finish with our recommendations and conclusions. To understand Ford's current challenge, it's important to look at where the company stands. Ford has been a major player in the automotive space for more than a century, and over the last decade, it has poured billions into its EV divisions to stay competitive as the market shifts towards electrification. Despite this investment, our analysis shows that Ford's EV sales are now projected to decline. That raises an important question. Should Ford continue investing heavily in EVs, or is a strategic shift necessary? Our analysis followed the CRISP DM framework, starting with business understanding. In this case, the profitability and trajectory of Ford's EV division. For data understanding, we worked with national EV adoption trends, EV sales broken out by automaker, Ford's EV and total sales, and Tesla's production and delivery data as a benchmark. We prepared the data by cleaning and filtering it, creating EV-only sales, and merging data sets for modeling. We then built multiple forecasting models, and finally, we evaluated the results to identify what they mean for Ford's strategy moving forward.
The first chart we're going to look at is Ford's EV market share from 2019 to 2025. Ford started with no electric vehicle presence, but it quickly ramped up, reaching its highest market share in 2023 at about 11%. However, after that peak, we see a clear decline. Even though Ford continues to sell more EVs in absolute numbers, the rest of the EV market is growing faster, especially with companies like Tesla, Hyundai, and Kia. This means Ford's slice of the EV market pie is actually shrinking, which suggests the company is falling behind its competitors as the EV market becomes more crowded and competitive. Next slide. This chart compares Ford's EV sales to its main competitors from 2019 to 2025, excluding Tesla, so we can focus on the mid-tier EV makers. Hyundai and Kia show very consistent EV growth year after year. Rivian ramps up quickly after in 2022, and Chevrolet has a strong peak in 2023. Ford grows rapidly from 2021 to 2023, but its momentum slows after that. While most competitors continue increasing their EV sales, this suggests that even without Tesla, competitor EV brands are expanding at a faster and more sustained rate than Ford. Next slide. This regression model predicts total EV market sales for 2023 to 2025 based on the sales of Ford's major EV competitors, Hyundai, Kia, Chevrolet, Nissan, Rivian, and Toyota. The red dashed line shows what perfect prediction would look like. The blue dots represent the model's predictions. As we can see, all three predictions fall very close to the perfect match line, which means the model performs well. However, the model consistently underestimates actual EV sales slightly, suggesting the EV market is growing faster than expected. Overall, this tells us that competitor EV sales are a strong indicator of total market demand. Looking within Ford, the decline becomes even clearer. Even though Ford's total vehicle sales stayed relatively strong in 2024, its EV sales dropped dramatically, nearly 31% in just 1 year. EVs also represent less than 5% of Ford's total sales at their peak. This steep divergence between total sales and EV sales suggests a problem specific to Ford's EV lineup, whether that's from pricing, product appeal, or competition, rather than a decline in consumer demand for Ford vehicles overall. When we examine the distribution of Ford's total vehicle types, we see that EVs make up only a small portion of the company's overall volume. Hybrids and internal combustion vehicles make up the majority of Ford's sales, with hybrids in particular showing strong and steady growth. This is important because it reinforces that many consumers still want lower emission vehicles, but not necessarily fully electric ones. That dynamic heavily affects Ford's ability to scale its EV segment.
To understand the broader market context, we modeled national EV sales using a linear regression. The results show that EV adoption nationally is still growing at a healthy, steady pace. There is no sign of collapsing or plateauing market. This again highlights that the challenges Ford is facing are not caused by failing EV demand, but rather by issues within Ford's own product lineup and strategy. When we apply similar forecasting models specifically to Ford, it becomes clearly why the projections don't hold. The model was trained on a short window of extremely fast growth from 2020 to 2023, which isn't sustainable long term. It also doesn't account for critical real-world factors like price sensitivity, especially with many EVs priced above what most consumers are willing to pay, or competition from brands like Hyundai and Kia. It also can't capture the increasing shift toward hybrids, which serves as a substitute for EVs. This explains why models' predictions for Ford don't align with reality. Overall, the Ford-specific model fails because it assumes past growth will continue without accounting for the changes happening in a broader market. Competition is increasing, pricing is a major constraint, and buyers today are much more likely to choose a hybrid as a middle ground. The takeaway is that Ford cannot rely on past trends to guide future EV investments. Without a strategic reset, its EV division is at real risk of stagnation or even long-term decline. To put this all into perspective, we benchmarked Tesla's production and deliveries. Interestingly, Tesla's numbers show stability rather than explosive growth, roughly between 2.2 and 2.5 million vehicles each year. This indicates the EV market is maturing. It's no longer in early hypergrowth phase. Ford is no longer competing in an emerging market, but rather in a much more competitive, slower growth environment. This reinforces the need for a more disciplined and strategic EV approach.
When we put all our findings together, a clear story emerges. National EV demand continues to grow, and Tesla, the market leader, shows consistent, stable volume. Meanwhile, Ford's EV sales are declining even while its total sales remain strong. Hybrids are capturing a major share of buyers who want a cleaner vehicle without the cost or limitations of a full EV. This means that simple trend models, which only look at past growth, significantly overstate Ford's future EV potential. As we make recommendations, it's important to consider the ethical implications of EV's analytics and forecasting. EV data often includes detailed location and usage info, so privacy protection is essential. Transparency is also important. Companies shouldn't use optimistic or oversimplified forecasts to mislead investors. And finally, pricing strategies need to consider fairness and accessibility. Overpricing EVs risks leaving out lower income consumers, reinforcing inequality in the EV transition. Based on our analysis, we recommend that Ford makes 5 key steps. First, focus on launching an affordable mass market EV price below 45 grand to meet consumers' willingness to pay. Second, continue strengthening its hybrid lineup using hybrids as a bridge while EV costs come down. Third, optimize EV production by developing dedicated EV platforms rather than retrofitting gas vehicle designs. Fourth, concentrate on vehicle segments where Ford already has strong brand equity, such as trucks and crossovers. And finally, use more realistic forecasting models internally, ones that incorporate competition, price sensitivity, and hybrid substitution. Our analysis does have limitations. The available historical EV data spans only a few years, and our models are primarily time-based, which means they don't fully capture all underlying market dynamics. We also didn't incorporate major external factors such as changing government incentives or interest rate fluctuations. In future work, Ford could benefit from including additional variables such as pricing, income levels, and policy effects, as well as running scenario-based forecasting to capture best case and worst case outcomes. In the end, the EV market as a whole is still growing, but it's clearly entering a more mature and competitive phase. Ford's electric vehicle sales decline is not a reflection of the broader market. It's specific to Ford's strategy, pricing, and product design. Hybrids are increasingly capturing the customers Ford hoped we would go fully electric. and simple trendline forecasts overestimate Ford's long-term EV performance. If Ford wants to succeed, it needs a more affordable EV, a strong hybrid transition, and a more realistic model of the market. Thank you.